mentor, you are an incubator. I mean, you cherry pick startups, and I believe you take them to Series A. So,
I'm Vikram Upadhyay. I represent GHV Accelerator. But as a disclaimer, I'm still an entrepreneur by heart, by brain, and by my DNA, I think. Well, I've been in this ecosystem for the last 8 years. The journey started with the first startup, which was just out of passion. I invested as an angel sitting back in Tokyo, and they are one of the star performers from the Indian ecosystem, and we call them Dhruva. So my journey in this ecosystem started from those days. So GHV Accelerator has recently been launched just to accelerate startups to address two pain areas. 99% incubated startups are non-fundable. That's what I found after helping IN setting up the incubator in 2010. And being the angel investor, I realized that this is something required after incubation. The startups need acceleration, so this accelerator came in picture. The second pain area which this accelerator is addressing is basically the lot of HNIs, cash-rich balance sheets, cross-border, not able to get access to the right set of entrepreneurs, startups in India. So this accelerator helps them to come in at pre-Series A, Series A. That's the secret sauce. So that's what we have been doing.
so we'll discuss the secret sauce a little later as well.
So we invest 100K, mentor them, control environment, and help them to raise next round. And that's about GHV Accelerator. Thank you.
Alok, we've known you to have run your own venture, Jobs Ahead, which was taken by Monster. Today you are an angel investor. Anything more to introduce you? So that
No, I'll just take a minute so that I can be relevant to the discussion. So, as Rajat mentioned, 1999, the original dot-com boom, we started a company called Jobs Ahead, sold that to Monster in 2005. Came out of there, had the good fortune of founding the Indian Angel Network along with a few friends. Came into the venture industry last 9 years, was running up Canaan Partners operations, invested in about a dozen companies through the venture capital fund. Last year decided to come out of venture capital industry and start a company again, which I did a couple of months back, and continue to be actively involved in angel investments. So about a dozen companies that I've invested personally in as my angel investments.
Thanks, sir. Anshul, you are the founder and director of Goons. So, you get us into this panel, the social side and the kind of environment side. So, I mean, two thoughts from you of being here.
Thank you. So, Goons is basically a not-for-profit, and to be honest, till a few years back, I didn't even know how many E's come in entrepreneur. That is something when the Ashoka happened and the Schwab happened and all. Today, it is called one of the leading enterprise. A lot of people think that we are in the business of collecting and distributing old clothes, which we don't do, to be honest. The whole effort is that how do we convert the second-hand reusable material into a currency, where the development work in the villages can happen. It comes out of charity, and people are paid in cloth, utensil, footwear instead of money. That's the whole game which we are trying to play, and we play with around 2,000 tons a year more. We'll talk, at the time of different discussions.
Nishant, I think why don't you introduce yourself? I mean, a lot of people will be willing to want to know.
I am Nishant. I've been an employee for 11 years with PricewaterhouseCoopers. Then became an entrepreneur, currently working with an organization called Investors Clinic, which is India's largest real estate brokerage platform, and we do GMV of over $2 billion every year. And now doing something very, very exciting, very close to my heart, which is working with UV on UVCan Ventures.
Okay, great. So we will hear about cricket and startups a bit later. And as you can see, most of the people sitting on the panel today are wearing two hats. Why don't we just check with Mr. Chowdhury that, what is it that you're looking at? Why aren't there many entrepreneurs trying to jump into the becoming angels? What's stopping them from becoming angels today?
I think that's a tough one to answer, but I think they are not pretty much exposed to this whole idea of angel investing, and they don't know the number of platforms that are available for them to come and join. So there are just very few platforms today in the country, just 5 platforms if you look at. I think if you look at the United States, there are 4,000 platforms. So therefore, there's a lot more exposure about platforms in the country, and as a result, more and more entrepreneurs go to those platforms and become angels.
So when you say platform, that's the offline and the online?
Offline and online, both platforms,
both
like
platforms.
Indian Angel Network, Mumbai Angels, Chennai Angels, his platform, and Let's
Right.
Venture, whole bunch
Right.
of them.
Okay. So, I mean, there is a lack of platforms availability.
That's correct. That's correct.
But what about the
And
entrepreneurs?
also, there's one more point that it's not also geographically dissipated all over the country. So if you look at the platforms, they are located in 5 cities, 6 cities. I think it needs to go to 20 cities, 30 cities, 40 cities, which is pretty much what you see in the United States. They're small, small cities, 20 people get together and they form an angel network. You know, so that's the kind of numbers that we need in the country to make this happen.
I mean, you mentioned the quality, novelty, and pitch, which was very important. Now, entrepreneurs are also businessmen, right? So they are looking at all these elements. Vikram, your thoughts. I mean, what else would you look for before investing into a startup?
See, when I look at the entrepreneur's venture deck, as an angel or a VC, which I have another hat, the fundamentals are same. Basically, I look for test POC. I look for the chemistry with the entrepreneur rather than the mathematics discussion going on in the first round. So what is test POC? It's the team, it's relevance. The team is not, constitutes 2 founders at least. So I look for 2 founders at least. Their relevance, their experience relevance with the venture they are into, with the execution capability. Then scalability of the model, which they should achieve it using a technology and have some proof of concept in place. That's test POC. Other than this, what I look for is the originality of the idea, how original it is, how local it is in nature, rather than just simply copying the Western concepts or the Eastern concepts. I think Shiva helped me to articulate it better, that don't copy it, just come with your own original thoughts. Maybe it's small, but you can scale it up later on. At the end of the day, when I take a shot, decide to invest, I look how asset light the venture is, because what if I invest and you're not able to raise the next round? Can you sustain yourself? So that's the final thing I look at it before I take a shot.
So, Alok, taking the cue, I mean, would you invest in somebody who's just got an idea?
Yes, I'll invest more sweat, less cash. Because idea needs the thoughts to be put in place. Small cash. I don't shy away in putting cash at the idea stage, but idea needs more experience, more brains to make it concrete plan, proof of concept kind of thing, rather than a lot of cash around it.
So, Alok, your views in terms of idea, prototype, fully running, great team, you know, where do you start?
So let me start by putting the entrepreneurs here back at the center of the debate, right? So you asked for a show of hands on how many startups and entrepreneurs are here. Can I just request for that again?
The startups.
Startups and entrepreneurs. And how many of you have raised external financing? Right. Right? So I think the first part, Rajat, with your permission, that I want to articulate is, all the rules that we might try and frame here don't work. Right? I have invested behind each one of those rules and I've lost money. Right? And then I've invested outside of those rules and I've made money. Right? I think there are only 3 questions you need to answer if you're going to get my check. Right? Is the problem you're going after worth solving or not? That's the first question. Right? The problem has to be worth solving. If you are able to solve it, then the size of the prize has to be compelling. Right? I'm not interested if you're going to go solve tiny problems. Right? Second question, do you have an interesting approach to that problem? Right? the solution you're proposing or the approach you're proposing, is that interesting? Does that promise to solve the problem? Third, why will you win? Right? What do you bring to the table that will make you win? And today, the entrepreneurial as well as the angel investing market is split into a barbell on this. There are 20-year-olds who are coming up with visions of changing the world without any experience, but just on the power of their ability to disrupt and their conviction that they will, keep riding the momentum wave. And they are being successful, right? We've seen enough of those stories. On the other end of the barbell is the 45-year-old entrepreneur who's saying, I know this industry inside out. I know what the weak spots are, so I'm going to re-engineer it from inside. And that approach is successful as well. Most of our rules that we set on this panel will classify you into one or the other. My sense is it will tend to favor the 45-year-old more than the 25, even though the wealth creation is probably the highest at the 25-year-old. Right? But those are the only 3 questions you need to answer. There are only 2 questions that you need to answer about me, right, to decide whether you're going to take my money or not. Right? One is, do I understand the problem you're trying to solve? Right? And hence, in areas which are highly domain specific, please go to domain experts. Right? Don't waste your time, going behind a consumer guy when what you need is an oil and petroleum guy. Right? Second is, can I help you win? Right? Do I have the relationships? Do I have the perspective? Or do I have the ability to stand outside and not bother you if that is what it takes for you to do your job? Right? So I think this entire thing finally is very simple. Right? We are here to make money. You are here to make impact and money. Right? If we can help you do that, we can understand what you're trying to do and we can be supportive about it. That's a good marriage in my mind.
That's lovely. Harshad, let's take your platform. Is it still open for 50 plus as well, or it's just 40s and 30s or 20s?
It's open for everybody. In fact, my platform is across geographies, so I have investors across the world. So I thought, having city-specific angel networks was not the way forward, because I think with the advent of online and what we could do online, you could build a platform where investors across the world, I have investors from China investing, investors from Europe, investors from all over the place. So that's the advantage of having a platform. Delivery is on email and telephone calls and video conferences. Lots can be done. But to answer your question around, sorry, you mentioned about the.
No, I was just starting the point with saying age. Does age matter to come up in your platform?
No, absolutely not. We have investors right from their late 20s to 70s. Age is irrelevant. It is important, as Alok mentioned, to understand the problem. Anybody who can understand the problem should be able to invest. But what is very important is to understand where you are getting into, the risk that you are taking, the problem with liquidity that is not there. These are a couple of things once you understand, I think it's a very, very addictive nature of investment and this asset class that once you get into it, I think it's very difficult to leave behind because there is a lot of value every angel can add into a company and it's quite exciting.
Okay, Nishan, you come from a very interesting background which is all about property and valuation as well. So we're going to take a cue on valuation of the startups. What do you look at them right now? Are their demands justified? What are your thoughts on the valuation of the startups currently? And also let's understand what's UV doing in the cricket space in startups.
Yeah, so that's the first question everybody asks, why did you start, rather than what you're doing and what will you do. So the reason why we started was a lot of people were approaching UV for mentorship, help, support. He's a great comeback story. When he landed in US, doctor told him that you have 3 months, either you will go back walking or you will go back in a box. So I'm starting your treatment with that assumption and you should also know it. So he has come back from that. So I think he brings a good story, comeback, fighting spirit, etc. So, and we wanted to give it an institutionalized structure where there is a team which looks at opportunities, evaluates them, and then obviously we go ahead with investment. We have already made like about 8-9 investments, 4 are announced, 5 will get announced later. As far as valuations are concerned, I think it's overemphasized, overplayed. It's been 3 months since we announced UVCan Ventures, and I got about 1,800 emails in my mailbox. out of 18, after going through them, and the team went through, I personally went through, we could identify 9 opportunities. So I personally feel there are not enough investable opportunities in the market in the startup space. So that's why, since it's a demand supply situation, there will be some factor of overvaluation, etc. But personally, I feel if the concept is ready, the founder is passionate about the problem, as Alok said, and if I as an investor, I am also equally passionate about solving that problem, I think the valuation discussion comes to about whatever 8-10% equity here and there, which is not such an important factor for us. So we don't haggle on that too much. We look at the comfort of the founder. Obviously, we have discussion around it. And in the end, what we want is that when we do the transaction, finally, the founder should feel happy about it and should not feel that I have given too much to the investor.
Alok, your views. I mean, in terms of also, it'll be nice to understand, what are the options available for startups today? Whether it's equity, debt, loan, and I think, what are the options what the startup should consider? And maybe your thoughts on valuation of the startups.
Yeah, I think at the angel stage, we are discussing it's largely equity, right? That's high risk capital. Debt providers normally don't come in. There are some, structured investments which are more convertible structures, which you could kind of think about as lower cost than equity. Within equity, I think there are really 3 buckets, and you can put your own money, you can take your friends, fools, and family. And then you can come to seed investors, call them angels, call them demons, which is essentially people who are not backing you because they know you, but they're backing you because they like your idea, they like your plan, they would like to make the same bet. And that brings in a degree of credibility because most of these investors will scrutinize your plan, will convince themselves that this is a good idea, right? So as you move from your own capital and friends and family capital to third-party capital, there is a degree of validation and endorsement that flows in. Valuation, yeah, again, I can tell you, 25 different ways of losing money, and buying equity cheap is certainly not a way of making money. So I'm not too bothered with whatever little volatility exists in the valuation markets. As Ajay mentioned earlier, a lot of that is actually most intense at Series B, C, or later. Haven't really seen much of a movement in angel stage or even Series A valuation. So, if you're going out with a paper plan today, valuations are roughly in the 5-6 crore range. If you're going with early pilot in the market, you could get to 8-10 crores. And then if you have anything beyond that, which is of the nature of, data that I can really look at, then you're falling in the 13 to 15 crore range, right? So that's where the market is stacking up today. It might go a little bit above, a little bit below later, but that's where we are at this point in time.